Welcome back. Now, lower output and costs associated with its demerger from the Anglo Group have weighed on Valterra Platinum's first half earnings, but the miner still expects to meet its full-year guidance as it eyes better PGM prices amid growing demand for vehicles. CEO Craig Miller joins us now for greater detail on that performance. Thank you so much for your time, Craig. Now, as we dissect the interim period that was, how would you actually describe it, considering also the added element of the journey that you have taken to demerger from Anglo American?
Yeah, so thanks very much. It's certainly been a very busy 6 months of the year. Not only did we successfully navigate the demerger and be successfully listed on the London Stock Exchange as our secondary listing and rebranding ourselves on the Johannesburg Stock Exchange, but we've also delivered a credible first half performance. If you have a look at our underlying performance, we were impacted by inclement weather in the first quarter, and particularly the flooding incident at our Amandelbult's operation. But I'm pleased to say that the team have done a sterling job in bringing that operation back to full production. And so we anticipated reaching full production levels now in the third quarter of this year, which then gives us the confidence to be able to deliver on our full year commitments, both in terms of production, but as well as in terms of our cost reduction program and ensuring that all of our assets achieve an all-in sustaining cost of below $1,000 per PGM ounce. And so, yeah, it's been busy. I'm really very, very grateful for the team and their hard work in delivering the demerger. But more importantly, just how excited we are about the future as a standalone leading South African platinum producer and really showcasing the amazing potential that we have on the global stage and delivering into what is becoming a very buoyant market for platinum and the other group metals.
All right. Well, just before we actually delve into the kind of pricing environment that we are seeing now, just to dial it back in terms of, the adverse impacts, weather impacts on particularly the Amandelbult operation. Is there any kind of resilience that you are building in order to kind of limit the impact of adverse weather conditions moving forward? As of course, we do understand that we are also in a time of big climate change.
Yes, certainly. I think, we have seen that inclement weather and the severity of a number of the weather storms and systems that come across our country and ultimately also affect our operations. That certainly has increased. And so as a company, we continue to improve our flood defenses, continue to improve our emergency responses to these incidents, and not only that we can protect our employees, but also support the communities around our operations. And so as a business, we've certainly learned some of the lessons from this incident and from past incidents, but it was just the scale of the water that we had on the 19th of February. So just by way of context, typically, average rainfall in and around Amandelbult in the month of February is about 300 millimeters of rain. Yeah. We had 300 millimeters of rain fall in just a 24-hour period. So just shows you the severity of this particular event, which then obviously had the Beerspruit, which burst its banks. And then we had the Beerspruit Dam and the wall failure there, which then inundated the area and ultimately caused the flooding of Amandelbult's Tumela lower shaft. But yeah, absolutely. As a company, we're very focused around continuing to protect our assets, invest capital to ensure their asset integrity and reliability. And that's really what we're going to do as Valterra Platinum going forward.
Yeah. And of course, I understand that as a miner, you're also very cognizant of your cost base, where you are trying to operate in as much of a low-cost environment as possible. Could these then added headwinds kind of change your cost-based cost profile for a prolonged period of time?
So we certainly think that, we've got an opportunity to be more productive and more efficient across our operations. We started a program in 2024 to reduce both our operating costs and our capital. Last year, we delivered about 12 billion Rand savings. And this year, we're on track to deliver another 4 billion Rand savings. So that doesn't necessarily compromise the integrity and the structural soundness of our assets. It just makes sure that we're focused on those things that really make an important difference to the operations of Valterra Platinum. and I'm really encouraged and pleased with the progress that we've made. It certainly sets us up to be a sustainable producer of PGMs, not only in 2025, but for many years to come.
And I mean, just in this period, and I guess also post-period, how much of a price buoyancy have you seen with PGMs, and do you think that the bottom has been reached?
So we've certainly seen PGM prices rise about 5% in dollar terms in the first half of the year. But the real material increases in prices have really come through in June and July. And so, where we are from a July perspective, we're 20% higher than where we were in Q2. So that's material for us. And so, based on our evaluation and sensitivity that we've provided to our shareholders as part of our results today, if prices remain where they are today, you could see another 7 billion rand in increased earnings coming through in the second half of the year. So very materially leveraged to that increase in prices. The price increases, we've been saying for quite some time that the market is in a structural deficit for both platinum, palladium, and rhodium, and that the prices that we saw back in 2023 and 2024 didn't reflect the fundamentals of the market. And I'm pleased to see prices have reacted, but they're certainly nowhere near the levels that we would consider that would really incentivize new production to come into the market. You'd need to see another 50% rise in PGM prices on a sustainable basis for you to see new PGM production coming to the market and generating a sustainable return.
I mean, it's actually quite an interesting point that you make that, I mean, with the kind of pricing that we're seeing right now, it wouldn't really, move you in a direction that could incentivize additional production, but still more financial room there. And of course, Valterra already has a strong balance sheet. Now, I want to know, how then do your capital allocation, investment allocation priorities look like, with already a strong balance sheet, but also the boost that you are seeing from the higher PGM prices?
Yeah, so I mean, we've worked hard to keep our balance sheet strong, and we're very focused around being disciplined in how we allocate capital. So just given the quality of the assets that we have in our portfolio, we'll continue to invest capital to really extract the value from those assets. So we're very internally focused. And then as a result of the cash that we generate, even in the current price environment, would look to return that to shareholders in the form of a dividend. So I am pleased that the board approved an interim dividend of 2 rand per share. And this is the 16th consecutive reporting period where we've now declared a dividend to shareholders, and therefore maintaining our discipline and our commitment of rewarding shareholders for their investment in Valterra Platinum.
I mean, in terms of increasing your operational capabilities, I do also understand that you are busy with work on Sunsert. I also saw that you decreased your capital investment guidance for that. Why is that, and what is still needed to get that project to its full potential at Mogalakwena?
Yes, so Sunsert is an opportunity that we have at Mogalakwena to explore via our decline at Sunsert, bulk mechanized underground mining. And so it was in a pre-feasibility stage. We've now taken that into feasibility. And as a consequence of that, we've really narrowed down the options that we had. And because we've now moved into that phase, we're very certain around how much capital that we will need to spend on Sunsert while we complete the feasibility study. And that's really the driver in terms of that reduction in capital that we're anticipating to spend. It once again comes back to our focus in terms of value creation versus just producing PGMs as a volume narrative. And we think that if we're focused around value and extracting the value from the earth that we mine to better our world, that's a really compelling value proposition for our shareholders and also for all our other stakeholders. And so Sunsert, we look to potentially, subject to it meeting our investment criteria, would look to deliver sort of meaningful ounces to the market by the end of this decade.
Yeah, of course, a resilient performance in the interim period, although you did experience, headwinds that did impact your operations and also financial metrics. You speak more positively about the second half of the year. Do you think that we could actually have a tale of two halves and that there could be a significant turning of the page for H2?
I certainly hope so, and I'm confident that that's what will materialize. We've certainly got the plans in place to be able to deliver on our full year guidance, both from a production perspective and from a cost, capital, and ultimately output perspective. And I really am encouraged by the state of the PGM market. As I've said, platinum, palladium, and rhodium are in deficits this year, and next palladium moves into a potential surplus, but not nearly as the same levels as what people were anticipating. And that should then speak to a continuation of a higher price environment. And I think, just where we see the energy transition not necessarily accelerating at the pace that was forecast 12, 18 months ago. And we certainly see an increase of demand for hybrid vehicles, which actually have slightly higher PGM loadings in them. We're really confident and upbeat around the outlook for the market.
All right. Well, thank you so much for your time and giving us more detail on those results. Always a pleasure chatting to you, Craig. That was Craig Miller, CEO of Valterra Platinum.